Today, we're looking at something pretty strange in the market. On one hand, you've got this deep macroeconomic uncertainty. But on the other, there's this one single signal from the tech sector that's cutting through all the noise with surprising clarity. Markets are really struggling to see clearly right now. The path forward feels, well, it feels clouded. But in this fog, one signal is starting to stand out. And it really makes you wonder, has the silicon cycle finally truly bottomed? So to really understand this signal, we first have to make sense of the fog surrounding it. And right now, it seems like most of that fog is rolling in from the direction of the Federal Reserve. What's creating this fog is just how fast things are changing. I mean, look at this. In just 1 week, the market's bet on a December rate cut completely collapsed, from what looked like a sure thing at nearly 68% all the way down to a 50-50 coin toss. A rapid shift like that, well, it's a perfect recipe for uncertainty. So why the sudden change of heart? Well, it's a few things happening at once. We've heard a lot of hawkish talk from Fed officials, basically warning everyone not to get too excited about rate cuts. And that's on top of the fallout from the recent 43-day government shutdown, which has created a kind of data blackout. Key economic reports are delayed, which means policymakers are essentially flying blind. And that's the heart of the problem, isn't it? The Fed needs data to steer the ship. When the data goes dark, they can't see the way forward. And if the people guiding the economy are lost in the fog, you can be sure the market is right there with them. All of this uncertainty has kicked off a real tug-of-war in the market. You've got these powerful forces pulling in completely opposite directions. And you can see that indecision written all over the daily numbers. The S&P 500? Basically flat. The Nasdaq squeaked out a tiny gain while the Dow slipped. It's the picture of a market that just can't make up its mind. But hiding just beneath that flat surface, something really interesting was happening. Tech stocks, especially anything related to AI, got hit hard in the morning, but then came roaring back in the afternoon as investors jumped in to buy the dip. It shows you there's this incredibly strong undercurrent of optimism around AI, and it's fighting tooth and nail against those bigger economic worries. And that brings us to the main event. Because in the middle of all this confusion, one company, a really critical piece of the tech puzzle, just sent up a flare, a clear signal that suggests a major turning point might be here. Now, before we get into what they said, it's really important to understand this one concept. We're talking about semiconductor equipment, the massive, complex machines that actually make the chips. Demand for this equipment is what we call a leading indicator. It basically gives us a sneak peek of where the chip industry itself is headed about 6 to 9 months down the road. So here's how that timeline looks. Applied Materials, or AMAT, one of the biggest equipment makers out there, just gave its forecast. The signal they're sending today points to a recovery in tech demand starting in about 6 to 9 months. And what's driving it? A huge acceleration in spending on AI infrastructure, which they see really kicking into high gear in the second half of 2025. The message from their outlook couldn't be clearer. The painful down cycle the chip industry has been going through, it's ending. And what's coming next isn't just a regular recovery, it's the start of a whole new build-out, a whole new cycle for AI. But, and this is a really big but, this incredibly positive signal comes with a condition attached. There's a structural shadow hanging over this recovery, which means it's not going to look like the ones we've seen in the past. Here is that shadow in a single number. AM told the market, point blank, that they expect to lose $600 million in revenue in fiscal 2026. Why? Because of U.S. export restrictions on China. This isn't just a bump in the road, it's a long-term structural headwind. So what does that mean for performance? Well, just look at the last upcycle from 2019 to 2020. AM stock rocketed up 180%. This time around, though, because of that structural drag from China, the expected performance is capped, somewhere in the 100 to 150% range. The recovery is real for sure, but its ceiling is just lower. So we have to see this recovery for exactly what it is. It's not one of those pure symmetrical tides that lifts all boats equally. No, this is a conditional recovery. It's incredibly powerful in one area, AI, but it's structurally limited in another, China. Okay, so what does an investor do with this information? How do you possibly navigate this gap between a really foggy macro picture and a signal that's clear but complicated? Well, the key is to realize that within the semiconductor space, not all companies are in the same boat. You've got chip makers like NVIDIA, who are just direct beneficiaries of this AI boom. Then you have the equipment makers, like AMAT, who are getting the tailwind from AI but also feeling the full force of that China headwind. And then there are special cases, like ASML, protected by what's called their EUV moat. They have a total monopoly on the machines needed to make the world's most advanced chips, and that gives them a structural advantage that kind of rises above all this other noise. So, all eyes now turn to the next big data point. NVIDIA reports earnings on November 19th. Their results, and especially their forecast, are either going to pour fuel on this recovery fire, or they're going to cast some serious doubt on just how strong it really is. And I think this leaves us with a final thought. Even when big picture policy clouds the entire market, some of these fundamental industrial cycles, they just move to their own rhythm, driven by these massive shifts in technology. And the silicon cycle, it might just be the first clear shape that we can finally make out, emerging from the fog. If you want to keep up with this kind of analysis, be sure to follow along. And I'm curious, let us know which signal you're watching most closely right now.